Hi, it's David here from the Freedom Founders Mastermind community. My tip today for you is how to prepare for the next market reset. So what do you mean by that, Dave? What do you mean market reset? Well, it's amazing that so many people have already forgotten about the 2008, 9, 10 financial crisis, housing market crash, whatever you want to call it, recession, worst depression since 1929. We heard all kinds of talk about it, and it was pretty significant. People have forgotten about that already. It's now 2017, some 8 years later. And all the media pundits, the political pundits, the Federal Reserve, mainstream economists, everybody says, hey, it's all good. It's all good. The economy's up and people are working again. And we're even seeing little bits of inflation out there. So it's all good. All the reports are good. And I say baloney. It's not all good. In fact, I think things are in some ways worse than they were in 2008. But here's the point. We always have market resets. And when a market resets, the financial markets reset, the housing market's affected because credit and finance go together. Businesses are affected just the same way, and so are people that are employed. It all has a massive trickle-down effect, right? Not just one sector is involved only. It's not isolated. Everybody is affected. You will be too. You probably were back in 2008, 9, and 10. Think about it. So here's my point. We will have market resets. We're going to have another one. I'm not a pessimist. I'm a realist. And what I know is after going through 37 years now of being an investor in the real world, being a businessman as well and a professional practice owner, I've weathered through those resets and I've learned over the years how to prepare for those. Not just to get through them, but to actually find ways to actually prosper and actually add to my net worth and cash flow. That's the key. It's not just be reactive and just struggle through. So what are some signs that we're in that recession? I'm not going to talk about why, but what are some signs? So in the real estate markets, when I start getting a lot of these cards or letters in the mail, this one is a nice one. It's got a nice tree on the front, and the back side it's got a nice handwriting font. These are cards that are sent to people that own investment property, non-owner occupied. How do they know that? Well, you can go through the databases and determine if an owner occupant lives in the property or not. All my properties are not taken in my own name, by the way, but there's ways that they can send to me to my PO box these cards, because what people are looking for is they're wanting to buy my rental property, buy my investment property. All these cards came in the same week. In fact, the last several days. Here's another one. This was a little bit prettier. It's got a picture of a nice couple in the front and then the guy on the back, and it's a little easier to read on the eyes. Again, same thing, offering a free house appraisal or cash offer. Here's another one. This one is kind of plain Jane looking letter, isn't it? Very plain Jane, but serves the same purpose. It says, I'm an investor here in this area, and I'm interested in buying your house located at blah, blah, blah lane, right? If I'll purchase the house, all is, I'll pay for cash, da, 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 da. Here's another one. This one's in a nice little cardstock style, right? And it's got a nice little return address. Again, it's got that handwriting font on the front, so it looks more personal. They want me to open it. Inside, these are what we call yellow letters in the business. These are yellow letters that are commonly used, but again, they're different, and good marketers use different ways to get people to open their letters. But that's not the point. The point is I'm getting a lot of these, and whenever I get a lot of these in the mail, especially over this last year, I know the market is getting to a high point. Exactly what happened back in 2008. The writing's on the wall. It's just a matter of when, not if, but when. And I think we're probably going to see a reset possibly later this year. If not this year, I think for sure in 2018. So here's my point. Here are the tips so you can get ready and position yourself so not only survive the next reset, but actually thrive. So first thing is get your own house in order. If you've got consumer debt, materialism, lifestyle stuff, vacation homes, car leases, car loans, credit cards, other consumer items, start getting those paid off. Not refinance, pay those off. Get rid of that consumer credit. You don't need it. You don't want it when there's a downturn. From a business standpoint, a lot of people are now using lots of lines of credit because credit's relatively available again right now, and that's one of the benefits to the economy, if you want to say there is one, that there's a lot of credit available. And there's some consumer resurgence and business optimism since Trump won the election. Again, I'm not going to go down that rabbit hole. It is what it is. I don't think it's long lasting. I think we're going to get back to the fundamentals of the economy, which says it's not a good economy. So in your business sector, if you're using lines of credit right now, get those paid off, or at least refinance them to a fixed rate amortizing. In other words, pay those off as rapidly as you can. Again, I think we've got a window of time, 12 to 18 months, to get your house in order. So I'd get rid of living off of lines of credit if you're doing that right now. I don't have a problem with using debt, but I'm talking about good debt. We did a whole video on that a little while ago. So in your own investment categories, or which could be business or real estate, if you've got debt, that's fine if it's fixed rate long term. No short term, no balloons, no lines of credit. Don't use that stuff if you're doing investment for the long term. Get those on fixed rate, longer term amortizations. As I said, if it's good cash flowing assets, business, practice, real estate, all good in my opinion. The next thing and the last thing I'm going to tell you that most people miss this is develop your relationships. David, what do you mean by relationships? My family's good. I have some friends, and that's not what I'm talking about. I'm talking about financial friends. Friends that will be there and that you've already built those relationships right now, both in business, finance, real estate, whatever you're doing. Know who those people are, because here's the key. I built up a lot of wealth and a large real estate portfolio over the last 37 years with going to the bank maybe 4 times out of 1,000 transactions. 4 times. I don't like the banks. I don't want to use the banks for my investments. I'll put money in the banks to deposit it, but I don't like to use the banks for lines of credit. So the key thing is develop relationships with real people, because there's a ton of money out there. People have capital today. In fact, that's why I'm getting all these cards in the mail. That's why the stock market's at an all-time high, because capital is looking for a place to go right now, because it's relatively free and easy, and the market's good right now, so to speak. So capital is looking for a home. If you've got access to good businesses and or like real estate investments, that capital is there. And I would rather access private capital, real people, rather than banks. I don't care if banks have relatively low interest rates today. They'll suck you in, and then the banks change names, they change ownership. The people you know today are gone tomorrow, and then they'll call your loans. They will call those short-term credit lines, because when the economy shrinks and contracts, the Fed puts requirements on those banks to pull capital back in, which means they're going to go after those shorter-term lines of credit, because they can demand you pay those off early, even if you're paying those on time. Do not get caught up in those arenas. But back to the relationships. My relationships, my network is my biggest insurance policy. If I lost it all today, meaning some calamitous, took all of my net worth and assets, I could rebuild it, not because I'd have to go back to work, but I can orchestrate deal flow. I know how to put things together. I'm a connector. You can learn how to do that too, but to be a connector, you've got to know people. Don't rely on the banks, the institutions. Real people are your best friends, or your best insurance policy. Position yourself now. So for example, if you're someone who likes to buy practices or businesses and you're good at doing that, realize when we have a reset, there's going to be a lot of those on sale, fire sales, bank foreclosures. You can pick up those assets very inexpensively, but you got to be positioned to do that, and you've got to have access to capital, not bank capital, but real people capital. Same thing with real estate. At the last reset we had back in 2008, 9, 10, we were picking up real estate left and right, and I didn't have to go to the banks. Why? Because I had access to real people, real capital. I know many of my friends were not prepared that way. They had access to deal flow because they're in that market, but they didn't have access to capital. You've got to have access to capital. If you want to be a passive investor like I am, but have access to the real deals, the real opportunities when that next reset hits, you've got to have access to the people who have those opportunities. Number one, they're connected to either practices or real estate. And so when the reset happens, all you have to do is access capital, other people's capital, tie them into your deals, let them piggyback on your deals, and you've got all the capital you need. That, my friends, is the way that you can ramp up and build your real net worth and equity. Trading time for dollars, scrimping and saving and trying to pile it up isn't going to work, especially when we have the big wave of inflation that we're going to have coming in the next 3, 5, 10, 15, 20 years. Mark my words, we're in store for it. You can either ride it or you can get beaten down like a tsunami. It's your choice. I know very few of you will take my advice on this, probably less than 3%, but those of you who will, you'll be well positioned. Those of you who don't, I told you so. It's your choice. Which one are you? This has been another tip from David Phelps at the Freedom Founders. Remember, always stay focused on your freedom. See you next time.